When you're looking at small allocation prudence, we were just talking about private credit. Some family offices have up to 26% allocated to that for whatever reason. A recent family office report said overall there's only a 3% allocation. So when you're taking a look at your allocation prudence, you have to look at the whole picture for the family office about real estate, all your investments, what type of investments, that you're looking at. So you should always be, having the proper constraints on there, because if one area takes off very well, then you have a little bit of an imbalance. So if you probably have heard over time where the large pension plans have readjusted how much money they put into private equity, because sometimes the private equity has done so well that their allocations now need to be realigned because it's a bigger percentage. The same thing with respect to allocation prudence. You need to look at where your values are on a constant basis to make sure it's in alignment with what you wanted from an allocation standpoint, because that's going to dictate a lot of your risk tolerance and the risk that you wanted to set up, into relative categories. So when you're taking a look at that, that's when you're going to shift things higher or lower in those categories. Today, it's a little bit different because, again, we were talking earlier about, the trade wars and the tariffs and things of this nature. But every year, every decade has its own challenges on investments. And the idea is to try to sift through the noise. I say just research, and talk with people about what's really going on and seeing what's under the hood rather than what's just in the newspaper.